Testing, testing, testing. Okay. All right, so it's January the 8th, and this is the first live presentation of the 10K challenge. Today I'm going to go over the blueprint, all the details necessary for us to succeed in this 10K challenge. I think this is going to be an interesting challenge because it's been simplified from a lot of the data that I've collected from the previous challenges. So I'm really looking forward to it. And let's see if there's about 45 registrants for this challenge. And I think we have 6 more that are joining. And I hope to have this challenge completed within 1 or 2 weeks. This week is going to be a pretty interesting week because we have a lot of federal agents, and that's going to create an artificial pump and dump. The volatility is going to be quite high, and that's perfect. Like, that's what we want. That's how those wealth wave setups are generated, and I'm really looking forward. I think this week we'll be able to catch from a JPOW pump or dump. I think we'll be able to catch a couple of contracts at like 20 cents and then close them off for like 25 bucks. But there's going to be some details about each trade because it's not as easy as you think, right? Because I mean, last week we got into a pretty decent trade. Actually, we've been getting into a lot of decent 10x, 20x trades. And as I was preparing for this presentation, I actually missed the 30x because of the work I'm doing in preparation for this challenge that starts January 10th. Okay, so let me just get this PowerPoint presentation going. Where is it? I guess it's this one right here. Okay. So yeah, this is a picture of the wolves. And the reason why I have the wolves there and then like an image of the lemons is because that's the kind of the principle that we are going to use moving forward. I'm actually kind of sick and tired of watching. I mean, I used to, in the presentation slide, I talk about Tesla. I used to trade like a lot of Tesla, a lot of Google. And I mean, Google isn't that bad, but there's been a lot of, it's split. They split the living beep out of Google, what, 20 times, 10 times? I don't know. I can't remember what the split is. But it's now reduced to like a 3-digit stock, like $80 stock, which is crazy. I mean, you can't make money as a directional trader trading Google, okay? And Tesla, again, you know, it's kind of getting frustrating even with all the smart people that are following Tesla and analyzing Tesla. You know, even though the information that they provide seems like it's valuable and legit, it just has nothing to do with the stock. Okay, so I mean, it's borderline hodler mentality to be talking about Tesla as Tesla keeps on dropping 10, 20, 30, 40%. You know, week to week, and then maybe it bounces like 10% one day. Maybe you catch like a 10% move, which is, you know, great if Tesla was trading at 1,500, but it's not. It's trading at like $100. So, you know, for option traders that are looking for directional moves, long calls, long puts, the market has been reduced. They've just literally reduced, and so there's some conspiracy behind it. Basically, the conspiracy or the idea is that there's a lot of these pump and dump boiler rooms that are just making a lot of money on the new traders, and it's been, you know, devastating for even for the cryptos. I mean, I have so many friends that have lost so much money, and the only way you can actually create a market where everything reverts back to the mean is just literally destroy, like reset the whole entire playing field. And when I look at what the market has done to stocks like Tesla, Amazon, Google, Shopify, they've all split, and that definitely changes the game significantly. So we've got to, for directional traders looking for those 10, 20x moves and in a consistent way, where the strategy back in 2021, 2022, we had like a great strategy where in a bull market, we would buy on Friday, Thursday, depending on the trigger, and we would trade like these, 4-digit underlying like Tesla and pull in like 3, 4, 500% returns on small risk. But now that's all gone. Okay, the whole game has changed, and now we've got to look for another opportunistic setup that's going to provide asymmetric rewards, and that's the whole point of having these lemons and these wolves. We're going to be using the idea of a lemon. Okay, lemons are not actually a positive thing, but we're going to use the concept of the asymmetry behind the lemons, and then use the wolf waves to help us identify some exponential setups that I've been identifying with not too much difficulty, and then position into them with very, very, very small risk, okay, at the beginning, and then as we grow the account, we'll start to take bigger sizing. But if this is the first challenge of 2023, and we want to take it small and make sure that we're in the best position to reach 10K within, I mean, theoretically, we should be able to reach 10K in this week, okay, if the volatility is ripe and we get J-Pow to destroy a whole bunch of positions, then we should get some nice opportunities at the end of the day this week. So loading up, the most ideal trade this week would be getting like into a wolf wave position with contracts that costs like 10 cents, and we put in $100, right? That would get us 9, 5, 10 contracts, right? And if we get into 10 contracts for 10 cents or 5 contracts for 20 cents, and they move to 10, 15, $20, we're done. Okay. Obviously that's hopeful thinking. I'm not really looking, I'll be looking for those setups, right? Because the volatility is going to be pretty extreme this week. But it happened. It happened actually last week. Last week it did happen while I was speaking about the upcoming challenge, right? So that's a little bit like, could I have taken that trade or not when I was speaking? Who knows, right? And I'm preparing all this stuff for everybody and making sure the scheduling, we're all in sync. We have to get our mindsets all aligned, right? Because if we're not thinking the same wavelength and one person's offset, like in a different wavelength, it really will affect the whole campaign. So we want to make sure that, I want to make sure that you're on board with the same wavelength, that you're not pushing some a different campaign or a different attitude toward the campaign, because I'm looking to make this succeed, right, and achieve my goal of looking for the best setup with the amount of risk I'm taking, and then completing this campaign within less than 17 trades, which would be, I think, 17 days or less, hopefully just 7 days. If you have any questions, you can post your questions in the YouTube chat, and then I'll answer them as well at the end of the session. Okay, so this is the image of the calls last week, and this wasn't okay. It was. I wanted to look for 10x. We got 5 or 6x out of this, right? And I wanted to get, and I closed it out. It was like a 5x within like an hour or 30 minutes of the trading day, and then it moved up to $25. Okay, we opened up 2 contracts, closed off one with 100%, and then closed off the second one at around $5. And then it moved up to 25. And it wasn't part of a 10K challenge. It was just part of the identifying the wolf wave. And I knew that there was a probability of more than 10%, 20% that it could go up to $30. And because it wasn't part of the challenge, it was I just took the profits and then finished the day off, and then started working on this presentation. These types of setups will happen, and they're going to happen a lot. Not only on the long call side, but it's going to happen on the long put side. And we're going to talk about how to get ready for these alerts that are going to be either communicated either through SMS, email, or Discord. So I'm running tests through Skype, running tests through Twilio. I'm running email tests through my Gmail to see which one, which alert delivery method is the fastest. So far with the SMS, actually, I've tested one with one person in North America, and they're not even getting it, because I think there's in America there's a lot of filters that probably won't allow that message to come through, especially from an unknown number. Because I'm here in Canada, in Vancouver, and any message that is communicated across those lines, it's going to pop up as most likely as a spam, because it's not on the U.S. network. So yeah, and that's unfortunate, because the SMS actually is the most expensive. It costs me money, which is fine. I don't mind paying 5 cents per SMS. But if it's not getting there, then it becomes very expensive, right? It has to get there. And now I'm kind of thinking about a different method. Anyways, so yeah, this is the setup here. We got in on that blue dot right there, and then closed it off for 5. It pulled back from 10 right there at around 12, all the way back to 3. And then it just ripped right up to 25. And we'll catch more of these. I'm sure of it when we got a lot of interesting tools to use that's going to help us provide that directional move in the next wolf wave. Okay, so today I'm going to talk about the underlying principle. I've already briefly talked about that. And then the past performance of the last 3 campaigns, which were important in developing the SPX 10K challenge for 2023. Then from that data, I'm going to talk about basically the simplified version of it, and what has been optimized. Trading psychology is important, because if you've got that FOMO, then you're not really going to be able to succeed. Sometimes when that FOMO comes, you'll probably react differently and take profits unnecessarily, and there's that saying, you can't go broke taking profits. However, in a challenge, you have to challenge yourself to let that position develop, especially when all the signals from the internals is telling you to hold on to. Okay, we'll talk about briefly the application filters, scheduling for those who have a 9-to-5 job, right? That's always important, because you're going to get ready between a specific time window, and you get called into a meeting. All right, tell the boss you got to take a piss. All right, go to the washroom. Get ready when you get the alert. Put that trade in the washroom. You're always okay to ask to leave the meeting for a second to go to the washroom. It only takes 3 minutes to put on that trade, right? Risk management, we'll talk about that very briefly, but it's already designed into in the position sizing, start date, initial balance, number of trades, expectations, trade plan blueprint. That wasn't included in the last video that I made yesterday. The alert protocols, whether we're going email, Discord, or SMS, and then finally questions, Q&A. Yeah, so that's a typical alert. So I got into two contracts on last week, and yeah, those are the ones that moved up to $25. So if you think about it, it's like $300 turns into almost $6,000, and that's not the only one we've been catching. We've caught actually three or four of them. Okay, so I mean identified them. So we're gonna get ready for this challenge where we're just gonna literally leave those contracts alone. However, we're gonna manage those one of them, okay, so that we're still not using the full amount of risk, just using the runners. Okay, so basically the lemon concept is a very popular concept used in the car sales industry, and it's just basically when you have a car that has so many issues with it that the cumulative damage deems the car pretty much worthless. Okay, and then the seller, if they know this information and they sell it to a buyer who does not know that information, the disinformation is asymmetric, right? One person has a lot of information about the car, the history, and the other doesn't, and then they negotiate the price, and that price is could be a pretty big payout for the seller, especially if they can sell it at market value. But then the bag holder, the person who loses the most is the buyer. So that's the concept that we are looking to approach the SPX with. We want that asymmetry, and it's not with the information. It's with the information is going to be there with the wolf waves and the filters that we're going to apply on those zero DTEs, but we're taking that concept and we're looking to get into that trade where we get a contract that's literally super cheap. I mean, nothing's really cheap, but low enough that we can buy at least one or two, and it'd be awesome to buy 10, and then have that set up, demonstrate and show that we have an opportunity for 10x, at least 5x, up to 100x if possible. Okay, I think the last CPI last year, I think it was November, that produced almost I think it was like 500x, 1000x. Okay, when the S&P moved up like 4 or 5% in one day. That's happening this week. Okay, so that's the whole principle. We got to understand that I don't care about a specific company. I'm not looking to invest into the future, right? For clean water, clean energy. I'm not looking to do that. I'm literally looking to trade for 5 to 500x returns with really small risk. Okay, really tiny little bets. Okay, and that's the beauty of that SPX 0 DTE. Last year, I think June, it was 0 DTE on Mondays, Wednesdays, and Fridays. Now, the 0 DTEs are every day. They've changed. A lot of things have changed substantially in the market that makes it really attractive for us to be getting into a challenge like this. Okay. So the minimum, I'm making the acceptable minimum limit to be 5x. So if there's a 5x setup, that's going to be alerted. If it's less than 5x, 4x, 3x, 2x, it's not going to be alerted. Okay, which means that if there is a move that makes a 4x move and we miss it, we're just going to have to pass and wait for the next setup. And there's always going to be another setup that's going to produce 5 to 100x returns. We just have to understand that if we miss a 4x move, we just wait for the next day. Okay, so the lemon concept is the principle, very small risk and then use that risk in a setup that produces exponential returns. And there's some interesting facts here. Porsche is right behind Fiat. Fiat and Cadillac as one of the car brands that produces the most lemons, with one defective vehicle manufactured for every 126,000 units. That's just fantastic. Okay, so moving on. So the past performance of the last four 10K challenges, they were actually pretty good. I mean, the first one we achieved a 10K return trading the high beta stocks, basically the tech stocks. The second campaign, more people started coming up, and we started getting the data set populating in different parts of the normal distribution curve. So more than 40% of the participants achieved greater than their initial balance. And then in the third campaign, we had more people, but then it started showing off at the tail end of the graph that some people were not able to achieve the goal of 10K. And then after on the fourth campaign, it just didn't start to get a little bit weak, and I think the market started to turn because most of the calls positions that we were in from June to March, from 2019 and 2020 were literally calls, and then the market took a downturn on April 20th, and the performance was governed by two strategies: the TGIF, which is basically long calls between Friday and Tuesday, and then we used the double Bollinger Band, which also helps to develop the idea of the price contracting and then expanding with momentum. Those are the two that we used for all the stocks that we traded in the NASDAQ, the high beta stocks. Here's a sample of the ledger. So this is the 2023 campaign. Sorry, that's not the 2023. This is the 2019. That date is a formula that updates when the Excel spreadsheet opens. So, but the close dates are all here showing 2019. This was I think this is the third campaign, and you can see that the initial balance started at 1,500. And then after 32 trades, the balance is now at 3,750. So a little over 100% return, but that's a lot of trades. And then you can see the number of contracts we've been opening. Even with 1,500, we were opening up 1 to 2 contracts. And you can see like the size of each of those contracts. We're still trading between 50 cents to $2. Okay, so it's a big number. Sometimes we would take 2, but most of the time we would just take most of the time we would take either, it looks like 2 contracts. And but the problem here is that's 32 trades. So if you simplify it such that you take a trade per day, that's 32 days. That's like a little over than a month. So I don't want to be dragging this challenge for 31 days, right? So that's a long time, and I don't think I have the patience for that. I don't think you do too. Even if you're guaranteed 10,000 after 32 trades, I mean, if you think about the exponential returns, it shouldn't if we find the right setup, it shouldn't really take 32 trades, right? 32 days. It should take probably half of that at most. Even with the small data set that I was just doing for the last 2 weeks, I mean, in theory, we would have been over 10,000. All right, so what's the next one? So after talking about the past performance, I want to talk about how we're simplifying the whole challenge from the past 4 challenges, and then now we're simplifying it into something easier dealing with only one underlying. So, I own a Model Y Performance, and I love the car. And like I said in the previous presentation, it'll do great after 5, 10, 20, 30 years. But I'm not a hodler. Okay, I'm straight up. You got to be straight up honest with yourself. I'm not a hodler. You're probably not a hodler. We're looking to trade the markets for setups that provide exponential returns. Yeah, I'm not sitting on. I don't want to buy Tesla shares and then keep on watching these crazy YouTubers talk about Tesla as if they own the company. Okay, and it's actually getting pretty frustrating to the point where I'm making it a specific. I'm making a dedicated couple of slides talking about it. So there's a lot of FUD and there's a lot of disinformation. And there's probably a lot of good information, but it has no bearing, no relationship to the way the stock is going to react. Okay, for some reason, it does seem like some of the price movement does move on news, but I mean, who knows if that was just intentional for another pump and dump, right? Okay, so yeah, like if you're gonna be hodling, then you got to be a lot younger than my age to hodl. So my daughter, she's like 0 years old. This is a perfect hodler. Okay, does not care about anything about Tesla. Doesn't even know about the company Tesla. She'll be able to handle the volatility without any stress for the next 19 years, because she can't take out the money until she gets accepted into a university. Like I also mentioned before the beginning of the presentation, a lot of the stocks that we traded in the last 10K challenge, they were Tesla and Shopify. Now you can see that the underlying is hovering around $100, like, and Shopify is at $36. So these stock splits have really changed the whole playing field. And now, as directional traders, we've got to change as well, right? If you are still trading Amazon, Google, Tesla, and Shopify directionally, you're crazy, because those stocks have to make a pretty big, substantial move to get anywhere close to a 5x. Okay, I think if it moves like 1.32% or Amazon moves 3.56% on a Monday, yeah, you get in at the best possible price, at the best option price on that day, and you capture a 3.56 move on Amazon, I think you're probably going to make like maybe 125% return, and that's not bad, right? But that's not what I'm looking for, right? I'm looking for something that's going to pay out way bigger than that, with an even smaller amount of risk. I think those Amazon contracts, I mean, like, I don't even want to think about it. I already know that, even just looking at what I'm dealing here and what I've seen so far in the option chain and how these things move. I mean, even Tesla, when it moved, it gapped down on Friday -7%. You still couldn't even get into those contracts at the low. You had to get in on the pullback, and it moved 11%, and that only produced around 500%, and you had to hold the whole entire day. Whereas the SPX, if you put in $100, it produced 25x, okay, on $100. So you bought Tesla at the low, and you catch that 13% move. You got put in $100. You got like maybe $500, $600 at the end of the day. You put $100 in SPX, and you catch that move that I just showed you there. You got 2,500. So it's a no-brainer, right? And that's the idea. The stock splits have changed the whole entire game for traders trading long calls, long puts, and now we've got to move toward the SPX. Yeah, this slide here is just talking about the FUD, and yeah, like I said, I like Tesla. I mean, I don't like Tesla. I like the car, the Tesla company. I never worked for them, but I'm sure there's a lot of people that you probably don't want to work with. But the car is great, and then even here with the YouTube, there's a lot of YouTube influencers talking about Tesla. And it's just for me, it just a realization that no matter how much they keep on talking about Tesla, it just keeps on going down, and all the information they're talking about has no bearing to a trader like myself and yourself. We don't really care about what they talk about. We only care about the balance, the initial balance, and the final balance at the end of each of our trades, right? These guys, they have a different agenda. I think they're just trying to get ad revenue, and I'm sure they have shares in Tesla, and they're hodling. So if you think about it like that, their business model and our business model is not the same. And I love driving my car. I get these YouTube recommendations on these guys like Gary Black and what is this new guy called Farzad. And I watch it, but they just keep on saying the same FUD over and over and over again, and it has nothing to do with my trading. Sometimes they'll talk about time-sensitive information like deliveries and stuff like that, which will play a huge role in the way that the stock price will react. But most of the time, even when they try to predict their numbers, it's all wrong. Like, maybe they'll get it right a couple of times, but so far this year and last year, they've been more wrong than right, which leads me to believe that it's in my best interest not to ever listen to these people talk about Tesla unless I have really nothing to do. So this has nothing to do with my trading. So I even posted some timestamps of their tweets. I have nothing against these people. I'm just saying that even if they are managing a lot of money and they say that they have their best interest in the Tesla shareholders, or they are very, very adamant about their price target, you can see this year and last year, it was not the case. No matter how much information they talk about, they don't control the stock. Only Elon Musk has the ability to control the stock. And all these people can really talk about is the daily action, the things that Elon Musk does or tweets about. And then even worse here, this was like a red flag on Gary Black, this Twitter overhang where he even tweets about the Tesla stock going to the moon. I even thought that it was going to the moon, but realistically, as a stock trader, option trader, do we really care about somebody talking about a Twitter, selling Twitter shirts? And does that make any sense to like a trader, like an option trader? No, it really doesn't. So even he's trying to make some money, hustle, have a side job, hustling the information, the creative information that he's having, and betting that this Twitter overhang is going to propel the stock price of Tesla. In theory, in actuality, he has nothing, no relevance to the company. The company doesn't even care about this person, and he's the only one who cares about the company, which leaves me believing that he's a hodler. Okay, and there's nothing wrong with hodling. It's not part of our 10K challenge. Moving on. Okay, so after everything is said and done, what's been simplified? So SPX, we're trading one ticker, and that ticker effectively removes all the FUD. So we do not need to waste any time watching or reading about tweets of a stock, a company that's laying off people, or advancing this technology, or some new contract between the U.S. army. We don't care about that, and I don't even know how the stock is going to react to most of that stuff. Okay, so the SPX is great because all that FUD, all that information that has, we don't even know how it's going to affect the stock price. That's removed, and the SPX is great because it's a one large moving average. So if one stock in the S&P has some sort of crazy news, the S&P will still continue to do its thing with the rest of the companies. The other simplification of the SPX is that it's not a 3-digit. I mean, you have the option to trade it with 3 digits. That's using the SPY, but we're doing the SPX. It's a 4-digit. So it is very versatile that even if you do have like a smaller account, you can trade it as a 3-digit underlying using the SPY. But that's not going to get you those exponential returns. You've got to use the 4-digit. And then because it's such a because we're simplifying it and we have the initial balance calculated, we can actually use a prescribed maximum limit of the risk that we're going to use for each trade, and that is our theoretical stop loss. Okay, so each trade we're going to be taking is about no more than $100, and that is our theoretical stop loss. We're taking 17 trades or less. So in the previous campaign, we took 32 trades with 1,500, but now we've reduced the balance, okay, from 1,500 all the way down to 400. Okay, so basically it's kind of optimizing the balance to maximize the return. And you might say, oh, well, how is it possible to trade 17 times with 400? That's assuming that a couple of trades start to work and we're in a 3-digit balance and we're taking more trades to reach the 10K goal. Okay, and then yeah, the risk, the initial balance is reduced from 1,500 to 400, and then like I said at the beginning, we simplified, got rid of all the tech stocks, and now trading just one symbol. So mentally we don't need to worry about. Mentally we don't have to worry about the each company, right? I don't know if you were thinking about Tesla last week, but it just seems like Tesla just keeps on popping up in my mind. So I want to just completely remove that and just focus on one ticker that has no news, and that will effectively kind of make my mind a lot clearer. If you have driven a Tesla before, Model Y, Model S, Model X, Y, 3, whatever, the cockpit or the instrument panel follows a minimalist approach. Okay, it's just a screen and a steering wheel. And I used to drive an Audi S4, and it had a lot of flashy buttons and colors and stuff like that. But my mind, driving the S4 and the Model Y, it's a lot clearer now. There's not a lot of things for my brain to constantly think about as I'm driving that Tesla. It's actually relaxing. All I have to really worry about is the acceleration and and then the traffic basically. But it's a peace of mind. And when I was driving the Audi, there's a lot of things going on, right? You've got the RPM gauge, you've got the instrument panel with all these digits and graphics. It was a little busy, but cool at the same time. But my mind was constantly being engaged with all these flashy lights in the Audi, whereas in the Tesla, it's nice and calm. And that's what I'm actually finding it to be when I'm trading the SPX. It's just literally I'm looking for wolf waves, and my mindset is a lot clearer, and the trading is not so active because I know exactly what I'm looking for within a specific time window. All right, so that transitions us into the trading psychology. So, like I said before, we've already defined the minimum wolf wave setup to be 5x. Okay, and when it appears, we're taking it. It's also very important that when the trade is alerted, that you have to take it right away. Okay, there's no like no one's wait. The market doesn't wait for anybody, right? So I will do my best to set the communication protocol to be as efficient, and also explain in this presentation the time trading window that you should start to incorporate in your schedule. Okay, it's kind of like making an appointment in your calendar to focus on a specific task at that specific time for the next 17 days. It is also important that in the event that you do miss a trade, for example, it happens a lot to me when maybe the baby's crying, right? I might miss a trade. Okay, I hope I don't. I've got my plan B in case that happens. But if you do miss that trade, you should probably just yield and wait for the next trade. Okay, that's ultimately the safest thing to do, because there's always going to be a wolf wave. And campaign number one, that's the campaign that I'm talking about, which starts on January 10th. It's the most sensitive because we're dealing with such a small amount of the balance is so small that each trade counts, right? We have one out of the 5 trades that we take in that $400 balance has to work. Otherwise, then you just blow up your account. Even though the risk that you take is $400 or $500, considering also taking into account the registration, even though the risk is not that large, the amount that we're working with is so small that statistically speaking, the probability is not likely to be in our favor. However, when you incorporate the filters that we're using and the wolf waves and the fact that there's these things that happen in the market at the end of the day, like the power hour rallies, the probability actually increases significantly from 40% to like 80%. So it is when you do set up these campaigns and when you're dealing with really, really low risk, it does look like it's not in our favor. But then when you kind of combine all the data that we've seen in this market plus those filters, then we increase that 40% in from 40 to 60 to 70, 80 to 100%, right? But you don't know until after the target has been reached. And in most cases, when the wolf wave does show like a 30 to 40x target, okay, that doesn't necessarily mean the target is going to be achieved. So we also have to take that into consideration. And using the application filters, we'll be able to try to maximize the returns when we get into that position. So the trading psychology for the first 4 trades is basically we've got to find, I'll find the wolf wave setup that produces a 10x potential, minimum 5. And then the runners, so if we have 1 or 2 contracts, we'll leave one runner and basically hold that position all the way to the end of the day. Okay, as the account grows, then our trading approach will change from holding it to the end of the day, but to taking profits and then maybe rolling over into a different contract. Okay, so we basically, what I'm saying here is because it's the first campaign, we're taking baby steps for the first 4 trades until the account grows to maybe $1,000 to $1,000 to $2,000, and then once we have a bigger balance to work with, we can start doing something a little bit different. But yeah, basically we're taking baby steps for now, making sure that the trades that we get into yield the maximum. The setup yields the maximum amount of profit. Okay, potential. Okay, so the filters that we're using and I've been using for the past 3 weeks, actually, from October, I've been using the Wolfwave, which is the tool we'll be using to get into to help us identify the asymmetric setups for long calls and long puts. I'll be using the CumTix. That's going to help us determine the direction, when to get into the calls, when to get into the puts. I'll be also using the Trin, okay, and that will be used to help us identify when the market is going to be moving directionally and what the choppiness of the market is going to be like throughout the entire day between lunch and an hour before the market closes. And we'll also use the VIX to help us measure the magnitude of the move if risk is on and risk is off. It's a fear index. Every trade that I take starting from January 10th, these will be documented in a ledger that I'm going to produce by tomorrow. So everyone will get a ledger. You can decide whether you want to use it or not. But a journal will be also created with documentation, and then that will be provided in campaign number 2, assuming campaign number 1 is successful. All right, so we're going to move on to scheduling, and I think most people have a 9-to-5 job. I don't have a 9-to-5 job, okay? And it's important to talk about the scheduling because you don't want to be sitting there 6.5 hours a day and also have your 9-to-5 job at risk, right? You need to know when the trading window. Okay, so here's the trading window that's a little specific. So if the futures is the market open right now? Let me just take a look. Yeah, it looks like it's open. It's up 0.16%. I'll wait for it to load. Actually, I can use my TradingView account. Super slow. Yeah, so it's open higher, but yeah, it's like, we'll see what happens. All right, so the scheduling is pretty straightforward. If the futures are open red, then you want to prepare to open up a trade at around 2:00 p.m. Eastern time, or 11:00 a.m. Pacific time, okay? Because we're gonna try to catch that wolf wave for the power hour rally. If the futures are green, like it is right now, then you might want to prepare to for a trade alert between the open and maybe till 10:30 a.m. Eastern time. And then also prepare for the last 2 hours of the day, 2 p.m. Eastern time, in case the market goes from green to red. Okay, so if there's no trade alert that's alerted when the market's green at the open, and you wait for like 30 minutes to an hour, so 9:30 to 10:30, then you're done. So 10:30, you're done. You're not looking for anything. I'll message something to talk about if there's anything, and then you come back again at 2:00 p.m. and then look for the next trade if there's any trade alerts alerted. Okay, and that's it. And then in summary, on a red day, 80% of the trades that we take in this campaign will be opening in the last 2 hours. So that's something that you need to understand. We're not aggressively opening trades in the morning, okay? Because first of all, there's those wolf waves won't appear until after the market. It could appear in the pre-market. It could appear 30 minutes after. But keep in mind, those premiums are all jacked up, and as time moves forward, the premiums start to decay, and 80% of the premium would probably decay by the end of the day, 2 hours before the market closes, and that's when we want to be looking for those wolf waves at the end of the day, okay, when the premiums are super deflated. In the morning, that is a little bit tough to take those trades, because what I find is when you take a trade in the morning with the volatility, you also have to be ready to close those trades fast. Okay, otherwise those positions will go worthless. So like I said before, this is a first campaign. We're looking to get into the best, cleanest trade setups. Okay, this is not a campaign right now where we're day trading. Okay, getting in here and getting exactly out at the maximum profit at 11:51 a.m. Eastern time. That's not what we're trying to do right now. Okay, if you want to do that, then you do that on your own. Okay, because we got people who are doing things at work. They're not really looking to be so engaged with the market. They want something to be a little easier. If your experience is greater, if you have more experience in the volatile morning opening trades, then yeah, go ahead, take those. Those are great if you can catch them, right? But long-term wise, I think that it will not work well if you don't have the experience to trade that volatility. So that's why 80% of the trades will be taken for the SPX near the last 2 hours of the day. I would say even in the last 2 hours, the last hour of the day, probably 60% of the trades will be opening then, okay? Because that's where we get those 10, 20, 50x moves. However, on binary events, we actually do have to open the trades before the binary event. So CPIs came up this week on Wednesday, and I'll talk about the blueprint going into this week, because this week is going to be a big, big week. There's a good chance that we could finish the 10K challenge this week. So if you're unable to trade the mornings, then just wait for the red days. There's always going to be a red day, and yeah, just wait. Otherwise, let's say you get into a couple of good trades at the end of the day and you pull out a profit, and then you decide you want to trade the mornings. You can do it like that too. So if you want to completely avoid the mornings because you've got too many meetings, then yeah, just be okay with that. There's always a chance that you might not reach the 10K sooner than us, and there's also the inverse is true. There's also it could also mean that you get to 10K faster than us because some of the morning trades didn't work out. Okay, so you don't have to worry about the morning trades because 80% of the trades are going to be taken into the close. All right, so the trading window here, this PDF is provided, but there's a minimum break time, which means that there's a period in the day where don't expect any alerts. Okay, like from 10:30 to like 10:30 a.m. Eastern time to like 2 o'clock p.m. Eastern time. Don't expect anything there. Okay, so understand that. That's like that will help with the trading psychology. Don't sit in front of the computer 6.5 hours a day. Look at the trading windows and see which one works for you. Okay, if you can trade in all of those windows, that's great. Then perfect, right? And you're really not looking to, unless you have the wolf waves and you have confidence in the way that the application filters are applied, you can take whatever trade you want. But if you're not, and you're literally waiting for those trade alerts, these are the time windows that you want to kind of focus on. So Eastern time zone, you want to be ready to get into a trade at 9:30 to 12:30 p.m. Eastern time, and then if the market is really selling off, then you want to really look to get into a trade and wait for alert at around 2 p.m. to 4 p.m. Eastern time. In between 12:30 and 2, you're doing nothing. Okay, and that's good to know. You want to know that you're not doing anything, and then there could be a time where we just have a runner, right? And you would just leave that runner alone. But I think the main point of this slide is just remember that you'll have a minimum of 1.5 hours of doing absolutely nothing. You can focus on your job so that you can keep it. Okay, so here's an example. So for example, if the market's crashing and the daily candle is long and red, then the trading time window for those who are in the Pacific time zone is 11 a.m. to 1 p.m. So don't look at the market, go work on your task, and then come back to the Discord room or get ready for the alert from 11 a.m. to 1 p.m. Like basically get ready to, if you're in a meeting, basically get ready to say you need to go to the washroom. Because let's say the wolf wave starts to show an entry at around 11:45 a.m. Pacific time, and you're in a meeting. Okay, so then you would know intuitively, subconsciously, to tell everybody that you need to go into the washroom. Okay, I'm assuming you have nothing to say in the meeting, right? And you just go to the washroom and take the trade. So you need to prepare for that in case that opportunity, that wolf wave triggers an entry between 11 to 1. So if there's no alert from 11 to 12, then maybe an alert will start. The probability of an alert triggering between 12 to 1 increases, right? And then if the Eastern time is 2 to 4. So if you're an experienced trader, you can trade the morning volatility, like I said before. But if you're a 10K challenger and you're just starting, and you want to really achieve this 10K, then it is best to just wait for those clean wolf wave setups and take those setups when they present a 5 to 20x potential. Right, so that one was 10 cents on that wolf wave. 10 cents, so we could have risked $100 and get 10 contracts, or we could even just done 5, which is $50. If we got $50 in there and it moved up to 10, that's $2,500 on a $50 trade. So I mean, this is what we're looking for, and I guess you had to have held on to the position all the way to the very end. But that's what we're going to talk about, how to hold the position all the way to the very end. And one of the main ingredients in allowing us to hold it to the very, very end is accepting that $50 is something that we're going to assume that goes worthless, because there's always another wolf wave setup. All right, so profit management. So when we get into the position immediately after the alert is triggered, you should actually sell, in theory, half of those positions, okay, at 100%. So if you got into a position at 50 cents and it moves up to $100, or sorry, 50 cents to $1, it moves up to $1 within seconds, you need to sell that one contract so that you have a runner. That will make the runner easier to hold. Even though it's still theoretically it could be tough for some people, because it moves up to like 1 to now it's like 9. What do you do? Right? So the main idea here is that once you open up that position, you buy that contract, 2 of them for example in this case 50 cents, you have $100 at risk, right? So then immediately you would put in a sell to close order, GTC, and close off one. And there's a problem if the wolf wave is legit. Most likely, it's gonna run, okay. And we don't know if it's gonna turn out to be like a 10x move, 5x move. We don't know. We just know that there's a profit target. We know that the entry triggered, and now we gotta take the risk. And the whole point here is that lemon, the asymmetric concept, that principle where we take something very, very small, because in the event that it doesn't work out, it's not going to blow up our account. And we can even improve the probability and the number of opportunities we can have in the future by closing off just one contract or half the position at 100%. Because now when you close that position, half of it off, the remainder is just a freebie. It didn't cost you anything, right? You're just you're letting the profits run or work for you. And that's it. And then if the position goes up, so then at that time when the position starts to developing from 50 cents to $1, $1 to 5, that's when I'll be using the CumTix or the VIX or the Trin or whatever to determine whether the buying pressure in the market is sustainable for another rally into the close, or just take the profit at 5 to 10x. Most of the time what I've been seeing is that the position usually just goes from from $1 into $10. So if the position ends up moving to like $10 and you're able to hold that position for a $10 move after closing one contract for $1, then take the $10. And if it's 8 to 10, it doesn't matter. Just take 8 to 10. That's the most likely. That's the ideal case. I mean, no, that's not the ideal case. That's like the case that I've seen so far, where a contract moves from $1 to like 10 to 15. But there will be some situations where it goes to 25 and 30. There's no real way to determine that, and we're just gonna use. Like even when we take a look at the beginning of the presentation here, like for example this one right here, do you see that image? So I didn't get, there was a lot of wolf waves, and there was actually a 78-minute T-team squeeze that triggered this entry right here, and you can see that the profit target is showing something like in the $60 range. There's nothing that's going to move that stock, the SPX, to like 4,200. Okay, so you need to be realistic about where you're going to try to close with profit. If you closed it off, let's say in hindsight you close it off at 27, 25, you probably closed it because you were able to hold all the way to the very end, and you started to see a little bit of volatility coming into the close with the CumTix showing weakness. Okay, so we'll do our best to try to catch that 20x move, but most of the time you're good to take, once it moves like 5 to 10x, I think it's not a bad idea just to end the day. Yeah, and then the stop loss, that's important, because even though in theory we're going to let the position go to zero, because sometimes the moves happen so fast that you have no choice but to see the contracts go to zero. In the event that the position starts to develop and it's working, right, and the market starts pumping and our positions start to move, that runner will have to accept a stop loss of 80% of the initial entry. So at 50 cents, you're gonna, and then like it goes from 50 cents all the way up to like $9, and it didn't close, you didn't close it, and it starts pulling all the way back. You gotta leave it till like, let it go till 10 cents. Okay, and that's gonna really suck, right? So that's gonna be that would almost be like something you would want to try to avoid. that wouldn't be the greatest, right? Having the contract move from 50 cents to $9 and you're holding it. So I guess we'll just try to see if we can use the application filters to help us ensure that that doesn't happen. But in theory, if we are in a position and it goes up to like, let's say we got into a position at 50 cents and it goes to $5 and we leave a runner and then it starts to pull back, then I mean the runner is the runner and we're gonna have to let it run until the day is over. Okay, and max profits in a trade that we get into before 9:30 a.m. Sorry, before 9:30 a.m. Usually experiences max profit at around 12 o'clock p.m. Eastern time or 9 o'clock a.m. Pacific time. So just keep that in mind. And also at the end of the day rally, it could pump all the way up to 3:55 p.m. Eastern time. So the last 5 minutes, there you got to be careful of the 5-minute dump into the close. And that usually happens a lot in a bull market. Okay, so the start date, again, it's January 10th. And before January 10th is January 9th. So I have a little bit more work to do to set up the communication protocol and also send out the ledger to those who have registered. And then that will be finalized by tomorrow. The starting balance is $400. So I actually have my account already ready. So I've already took out all the gains that I had in my own account from the SPX trades and then only left $400 in there. And I guess the campaign actually is $500 because the registration is $100. The max position size is 100, but it could be anything less than 100. I recommend 100 because you now know that you have about 4 shots to taking those wolf waves. Okay, that's 25%, 25% probability of success, which is what we want. Okay, and the contract price range will range between 25 to $1. And if we're lucky, I mean, 10 cents would be great, but we'll see. I don't think we're going to get a wolf wave tomorrow, but I mean, we'll see what happens. And yeah, the number of trades will be 2 to 17. So we could finish the campaign in 2 trades. We could finish it in less than 17. Okay, so the trading blueprint for this week, I have the U.S. economic calendar here and then Fed speakers that are scheduled to speak this week. So we have Bostic that's speaking at 12:30 p.m. Eastern time. So that's going to cause introduce volatility. For after 12:30, there's another 3.5 hours left before the market closes. So that will definitely make the market move. So do we want to trade at the open? No. Okay, so I'm telling you straight up, we're not trading. We're not opening up a position when you got Bostic coming in to the market at 12:30 p.m. Okay, and I don't know. I'll probably see if there's any wolf wave. And also January 9th is not even the beginning of the campaign. But you can see if you do want to take a trade for the 9th, and then you're following this campaign that I've just discussed, your trading window is going to be sometime after 12:30 p.m. Okay, so then January 10th, that's when we start the campaign, and we have Jay Powell speaking at 9 o'clock a.m. Eastern time. Perfect. That's 30 minutes before the market opens. I don't know exactly what is going to happen Tuesday because Monday has to finish off first. So, yeah, I don't know, but we will try to identify a wolf wave setup on Tuesday. Okay, that's the first day of the 10K challenge. Does not necessarily mean it's the first trade. There's going to be 100% guarantee a trade that we'd open. Okay, because we're strictly looking for wolf wave setups that produce 5 to 10x. The trading psychology here is we have eliminated the FUD, so we're not looking for anything but wolf wave setups that produce 5 to 10x. That's the only FUD that we're dealing with. The market with the wolf waves. Okay, whether the wolf waves produce a quality setup or not, that is what we're dealing with. We're not reading other people's tweets. We're not looking for trading ideas. We're just waiting for those wolf waves to develop. So 9 o'clock a.m. tomorrow, there's probably the market's not open by then, and then 30 minutes later, the market could just go nuts. So in theory, if you're getting ready to trade for the 10K challenge on Tuesday, you want to probably reserve the 9:30 or 9:20 a.m. to 10:30 a.m. Eastern time window for that J Powell market moving event. Okay, it's not going to be the biggest market moving event because it's just speaking about whatever he wants to speak about. Probably 2% inflation, whatever. So that you got to remember this. This is kind of like the mindset that I'm kind of preparing for everybody. I can't say with a high degree of certainty that it's going to happen because we need Monday. Like right now on Monday, I can clearly see on my screen here, okay, that I am not taking a trade when you got this long green hard candle and then you got the 6-day moving average way down here at 3,875. There's no way I'm going to take, even if a wolf wave shows a 10x potential, I'm probably banking on that to happen on the puts, not on the calls. I just can't see this making another long green hard candle on a Bostic from the Fed speaking at 12:30 p.m. What could he possibly say that would move the S&P up from 3,900 to 3,000 to 4,000? It's not going to happen. Okay. So that one, that's a pretty easy one for me to call out. Okay. Whatever happens after 12:30, we'll have to just see. But it's not even we're not even trading. The campaign doesn't even start on the 9th. Okay, it starts on the 10th. So once the price starts doing its thing on the 9th after 12:30 p.m., you get a better gauge on what to expect going into Tuesday. And then we got J Powell. So J Powell is really going to move the markets. Like markets listen to every single word. And that will be an interesting day. I would say it pulls all the way back and does this launchpad setup. But I mean, wait till Monday's over. All right, so then Wednesday, I've made like a dedicated slide just for Wednesday. It just says non-scheduled. So I think the market's going to really take a big hit here, because how can the market move in a bullish direction if there's no news? Okay, market is moving on news, up or down, and there's nothing scheduled. And we're in a bear market right now, so most likely bears are going to be taking advantage of this Wednesday day. Okay, that one's a no-brainer. And then we got on Thursday, we got like a whole bunch of MVP Fed speakers. We got Patrick Parker. I don't know I don't know any of these feds. I just know that federal agents are not good. And we got James Bullard. That's both of them speak before the CPI. So yeah, that makes things very interesting because the market can move in both directions before the CPI number comes out. So that will be an interesting trade setup. The main plan here going into Thursday, because Thursday is such a big day, is to, I wrote it down here, is that since the trading week will be extremely volatile, and we are in the month of January where it's super bullish most of the time, we are going to strictly try to identify wolf wave setups that help us get into a 5 to 20x opportunity. And the short-term goal for this week is to grow the $400 account up to at least 1,500 between January 10th and 11th. Okay, I mean, it could be greater than 1,500. I'm just making a short-term, very short-term goal. That's a 2-day goal. Okay, I should probably write that down. The short-term goal, which is like on January 10th and 11th, I would like to see my account at 1,500. Okay, and then with that 1,500, I'm not increasing the balance or the position sizing from 100 to like 300. I'm literally going to put in a straddle with $100 on each side using the profits. Because when you put a straddle, long calls and long puts, it's effectively zero, right? So you're not putting in like more than $100 on each side. There is a chance that there's no market moving event that occurs on CPI, and then both the calls and the puts get hit. But I highly doubt that that's the case. I actually think the probability that the calls are going to work out is much higher than the puts, especially if Wednesday gets hammered. Okay, that's why I put this presentation slide here saying there's no schedule of any sort of Fed speaking on Wednesday. I'm expecting Wednesday to be a very bearish day. So then we would get into the positions on Wednesday to see if we can catch a little bit of a power hour rally, and then hopefully by the end of the Wednesday we have the account up to 1,500. So that's the short-term goal. At least I want to see 1,500. But even if we don't have 1,500, a double will be sufficient, because that will be from 400 to 800, and I'll still use $200 from the $400 profit and straddle into one call, one put into CPI with the calls and the puts, if and only if there's a wolf wave that's showing 10 to 25, at least 5 to 20x exponential return setups into Thursday. Okay, so that's the plan. That's the short-term trading plan for this week starting January 10th. And so in summary, this week I am planning to only risk no more than $200 of the 400, right? And by the end of the week, I would like to see $2,000 or more, okay? Because I don't know how high the move for the puts or the calls is going to be on Thursday. The S&P can move up 3 or 5%. It can move down 3 or 5%. Either way, on those calls and puts, if you buy something for $100 on the long calls and the long puts going into CPI, and we get a market moving event, right? Keep in mind there's a 4,225 gap and a 3,110 gap, 3,810 gap. The moves can be quite big on that type of data, CPI. And maybe it goes down first and then rips up. We won't know until that Thursday. But my whole point is, because of the uncertainty and it is a binary event, my short-term plan is to trade the wolf wave setups on the 10th and 11th, grow the account to at least a double or more, and then use those profits to straddle into CPI, so that if the CPI moves the market 4 or 5% up or down, then we're gonna see those calls and puts print from $100 to like $5,000 pretty fast. Okay, and then we're like almost halfway done the 10K challenge. So that's the plan, and yeah, and it will be nice to end with 10K by the end of the week, but the probability of success is less than 10%, which is pretty much an underdog. We are the underdogs, okay? But I mean, if you want to be an underdog and you want to bet on America, then you get paid out. If you want to bet on America going down, you'll get paid out. And that's what I'm talking about with this straddle into CPI. It doesn't matter which side you're on. We just need to see a big move. And if the probability of success is really low to reaching 10K, but the probability is there, that means that there's a big move coming this week. And that big move is going to be on, I think it's going to start on Wednesday, but then it'll just reverse in the opposite direction on Thursday. Okay, so if you are interested and you haven't signed up, what you need to do to help you get the alerts in a timely fashion, remember, once the alerts are in your mailbox or in your SMS or whatever, you got to take them right away. Okay, these are like zero lag indicators. They don't wait for you to think. Okay, there's no thinking involved when you're only risking 400 and there's a 10x their setup, and you got 25% chance of hitting a big win, and that's all we need. Just one of those wins, so we can continue to do the wolf wave setups in the next trade, that next trading opportunity. So if you want to get ready and help you, then you need to send me your information, mobile number, email, and Discord ID, because I don't know right now if I'm going to do mobile SMS. I have to test on 2 more people, because I hate it when I have like everybody have the last campaign I had the SMS set up and I sent it out. Half of the people got it, and then like some people didn't even receive it, and then it just messed up everything, right? So I remember that very clearly. I'm trying to do it one more time, and the reason why it happens is because there's a filter, some sort of mechanism where your phone provider will filter out any unknown or outside area code numbers, and then and then maybe it'll recognize that as a spam or allocate that as a spam. Emails seem like the most efficient and fastest, and also Discord. So if we go Discord, then there's like probably like 60% chance I'll just do Discord and transition the Discord channel into just a pure SPX trading room, where I'll from time to time post other trade setups in other tech stocks like Tesla. But I mean, those things have been destroyed, not because of the price, the decline. It's because of the split, right? Because even if Tesla was at $1,000 and it dropped like 70%, I mean, it'd still be worth more than, like, the underlying will still be trading at like maybe like $200 to $300, which is still fine, right? But it's been changed. Anyways, yeah, on January 9th, I will be finalizing everything. Okay, so everybody who has emailed me their information will then now be on my to-do list to make sure that they're properly set up for January 10th. January 9th, expect to receive a Excel spreadsheet. If you already have a ledger, something that tracks your trades, expect, if you don't have one, you'll just get one from me. And then registration, if you haven't registered, go ahead and register using the registration link there at purchase-tossoption.com/10K. Okay, we got a question. Okay, we got a comment here from Judeel. Delivery, it's fast in email. Discord? Which one is faster, email or Discord? I mean, if you got Discord, then I guess Discord is faster. Or, yeah, is it faster than email? Probably, right? Because then I can... I would recommend doing... I think the SPX in Schwab chain is SPX.W. There's a delimiter that you need to recognize in your from your broker. Schwab does. All brokers offer SPX. For me, it's SPXW. For Schwab, I think. Let me just double check. Let's see what it is. Yeah, I'm reading some stories about people losing money on the 0DTE trades. Well, that one I don't. Does Schwab? I'm looking on the try putting a $ in front of the SPX or the SPXW. That might work. You can substitute the SPYs, but the difference is that you need to buy more contracts, right? Because it's just another digit. But I would recommend sticking with the try to stick with the SPX, because that one digit could end up, because when you do the SPX with us, then you're going to do one contract, and if you do SPY, you're going to do 11 contracts, for example, right? And there could be a fat finger mistake. With the SPX, it's always going to be one, so less mistake will be good. What else is there? Got another question that just got emailed to me, and the question is, Roger, what do you think is the probability that you're going to be able to complete this with the 10K? Okay, very good question. So the probability of reaching 10K, in my opinion, I believe I can do it, especially with a smaller account. The probability, I would say, I'm going to just say I have a 90% probability of doing it. Now, when we define a successful campaign, you also have to take into account margin of error, right? So then if the campaign reaches 10K, then obviously it's a success, right? Because it's like it's night and day. Okay, Roger said 400. He said 10K is 10K, so you can't argue against that. But when you're trading in the markets like this, and you've got like price moving crazy, like goes up to $10, pulls back to like 4, and then it moves up to 25, you have to introduce a margin of error. So a successful campaign would be a margin of error of plus or minus 5,000. In the previous campaigns, we've had people who actually held on to the Tesla contracts, and it produced like $40,000, $50,000 from a $2 contract. Okay, it can happen, but obviously it's going to follow a normal distribution where the tail end will be a very small group of people that will be able to achieve that tail end. And usually that tail end is associated by holding the contracts to the very, very end. Okay, so when you're going to see if this is a successful campaign, you have to take into account the margin of error. So anybody who turns $400 to $5,000, that's success. But there will be some people who say, well, you said you promised me 10,000. First of all, I didn't promise 10,000. That's my goal. And second of all, it could be even higher than 10,000, right? It could be 20,000. So because we have this large range and the price of these SPX can move so crazy, then you need to introduce a margin of error to really make it clear what a successful campaign will look like. And you don't stop there, right? Once you finish one campaign, do you think you're going to stop trading in the market? No. Okay, especially if it works, if you're up like 200, 300, 400% or 1,000%, you're not stopping, right? So there's going to be campaign number 2 and campaign number 3. And I think with this asymmetric approach where you're taking very small risk and you're able to put in that sell to close limit, that close order immediately after you opened up that position, and then you let the runner run for that 10x, then you really don't have then you have a system that you're going to keep on working in and day out. So that's the plan. That's what I'm expecting. So basically, there's no FUD in this campaign. We're strictly looking for a 10x play where we have a wolf wave setup that is demonstrated not only in TradingView. I use TradingView and Thinkorswim to identify the wolf waves, and once that starts to plot, then I go into the option chain to look for the ones that have that TTM squeeze either on the call side or on the long put side. If you have any other questions, just email me. Other than that, get ready to get the make sure you have your information emailed to me before the 10th, preferably January 9th before midnight. And then on January 9th, I'll send out the spreadsheet for everybody. The performance of all the trades I take will be screenshot from an image that looks like this. This is my this is one of 3 accounts. I don't really use the RBC. This is an RBC account. I'm able to trade SPXW here, but this is the account that I'll be using, and that's what the template looks like. I'll be posting my progress in an image that looks like this. Okay, it's not going to look like a Webull image. I don't know. I'm trading it from Canada, so we do things a little bit differently here. And I will also trade from my TradeStation account, but the main, I'll be focusing just on this one for now. Okay, so thank you very much for your time, and if you have any questions, just email me at rogerpack@gmail.com. Thank you, and let's make this a successful campaign. Do you, of course, yeah, good question. I was just about to close the, just came in the last second for the questions. Yeah, let's do a Q&A, quick Q&A. If you have any last questions, any questions related to the SPX or anything in general, not too specific, ask them now. I'll leave the Q&A session for another 2 minutes. So it's 7:29 p.m. Eastern time. So 7:31, I'll end it. So the question from Terry Hunt: do you notify closing orders? Always. I always notify closing orders. However, if you might see, let's with the you have to understand, if I put in an order and I close it at 9, that takes me maybe like 1 minute. It'll take me about 30 seconds to close it on my end for 9, and you might just see it at 9 as I'm closing it. Okay, so there will be that little gray area whether you should close it or not. Okay, that opportunity to close it at 9. I will alert it. And you could also close it at 9, right? So, I mean, let's take a look at this image right here. Okay, see this one right here, this image? So in this case, if the this contract right here was at 10 cents, okay? And our position size is about $100. So in this case, it's 10 cents, which is really low. It's like only 5 cents away from going worthless. Then I might open up and I see the 10x. Okay, this is a 10x setup. So then I'll decide whether to put $100 or $50. I'll put $50. That gets me about 5 contracts. So like I said, once you put in 5 contracts and immediately those contracts go from 10 cents to 20 cents, you closed off half. So you might be asking, well, Roger, how do I close off half of 5? So you close off 3 or 2. So 3 or 2 is up to you. So probably you want to close off 2 because you're assuming them to go worthless anyways. So then when you when you get into this position on a 10x, you literally have to wait, and then I'll alert that the target is around $8, but notice it went up to 5. So wherever that target is, wherever the projected target is, I will try to close it either on this large green candle. I don't think I'll ever be able to catch this wick here, okay? But I'll close it at the closest possible move toward that periphery line. So yes, the answer is I will alert. But if you see like $9 contracts after you bought them for like 10 cents, I think, and you have 3 contracts left, I think closing off 2 is not a bad idea without even me asking. Okay, but I will be in the same trade as you. It's just think about it. You got them at 10 cents and now they're at $9. You got 3 left after closing 2 at 20 cents. Close, and if you're in a situation where you have 1 left, close it off at 9 without me asking, because I will be, we will be in the same boat. I will close. Okay, but there you have to also recognize that there will be a delay because I have to close my position too. So that will take about 30 seconds or more, right? Maybe my fill doesn't get filled. So be aware of that gray area where all of a sudden, oh shit, like I'm up, like I bought them for 10 cents and now they're $9. I'm waiting for Roger's alert. Don't do that. Okay, I think it's okay to close it and you can always get back in later, but there will be that gray area and I will be well aware of my positions being at $9 and same as you. So yeah, it's like kind of like the same thing as don't sit in front of the computer for 6.5 hours a day. That's why I've created a schedule where you can kind of work around based on what the market's doing. I don't want anyone sitting in front of the computer 6.5 hours waiting for my alert. That's brutal. So just like also if the trade goes from 10 cents to $9, I think it's the smart thing to close and I'll be there, but I'll be watching it on the screen too, right? And if I see it like a clean setup moving in that direction, like in this image here, then I will make it clear that I'm going to hold it all the way up to this green perforated line at $9 with 3 contracts. But let's say it goes from 10 cents and you're up like At 4, you got 3 contracts left. It's okay to close off one because you'll still be in profit even if those 2 contracts go to 0. But if I can see that clean move all the way up to the periphery line, I will try to hold at least the 1 contract toward $9. So there, because we don't know, but I'll do my best to try to hold and hold that position for maximum profit. Will you post a snap of the SPX charts when you say yes? I will. So whether it's in the email or whether it's in Discord, I just need one more day to think very carefully because I want to make sure that nobody asks questions about, oh, they didn't receive an alert if I do it through the SMS method. SMS method will not produce an image for me because I don't know, I haven't done that before. I know I can send them out, but I also know that the telecommunication companies will also block my Canadian number when it goes into the American telephone lines, mobile lines. Okay, so is that it? So yeah, just get ready. I mean, remember, I think that the takeaway from this presentation is don't sit in front of the computer for 6.5 hours. Remember, there's going to be a do nothing period, a break period from 10:30 to 2 o'clock p.m., especially on a red day. And we're only taking clean wolf wave setup, so that means we do not care about what people are tweeting about. Okay, we're just taking 10x trades. We got 25% chance of making a 10x trade because we got $400. Somebody asked me in my email again, they just emailed me, they say, what if they want to use a larger account? Okay, if you want to use a larger account instead of $400, you have to figure out what that amount you're going to use. So we're using $400 and the maximum trade is $100. If you use $1,000, I think you probably want to use like $200 or $300, right? Around, you should have at least 4 shots. Okay, so divide the 1,000 into 4, and then make sure you have at least 4 or 5 trading opportunities with the amount that you come up with. Okay, thank you very much for your time. Let's get ready. Let's make this a successful campaign, and I'll get everybody prepped and ready by January 9th and January 10th. That's when we start. Okay, Jay Powell speaks on January 10th at 9 o'clock a.m. Thank you very much and have a great night.